which will be clicking in a minute or so. His son just won his first high school basketball game. So tonight we want to speak briefly about disability insurance and student loans. I know we only have 30 minutes or so. So for those of you that are in your first, second, or third years, you should find out from your current institution where your benefits are and what they are. Most dental schools do have some type of disability program for their student body. Does anyone, I'm assuming we have some student loans. Some of us have student loans. Please remember, the student loan picture is changing and is changing quickly with the new administration. And so what you used to have to do back in the day before the federal loans were consolidatable, you had to go through an outside institution in order to make your student loan interest a better interest rate. You no longer have to do that. You don't have to take your federal loans and turn them into private loans and so on. So with that being said, the student loans have 4 income-based repayment options. The one that I want to talk about is a revised pay-as-you-earn program. All 4 of them go off of 10% of what your earning was the previous year. So if your income was 0, 10% of 0 is still 0. What that does, though, is satisfies half of your interest rate on your student loans on a month-to-month basis. The problem with the current student loans is that you cannot do any of these repayment programs while you're in dental school. You can do them as soon as you enter residency. So if you get paid during your residency, the second year of your residency, you will have to pay 10% of last year's income. Okay. So, Michelle, do you see Jeff on?
I don't.
Okay.
But I had a question, then we also had another question that comes in. My question was about the free ADA insurance that all ASDA members are given through Great West Financial. Would you recommend keeping this insurance as we go forward, or like what we should look for in a disability plan?
So there's two on disability insurance. There's 2 main types. There's a group policy that covers the entire group of individuals, and then there's an individual policy that you go through a medical process, an application process. The underwriter, i.e. the person's that reviewing all your records, ask us questions and so on. That's a policy. That's 50 to 70 pages. It's a booklet. Group insurance is a very small packet, 1 to 3 to 5 pages type of thing. So as soon as you leave the group, you lose the insurance. That's why having an individual policy, right, is a better tactic to do it. The problem with disability insurance is that you cannot apply for it until you're a 4th year dental student, right? Because the insurance company's rules. So as soon as if you've already matched into a program, into a specialty program, you're able to have a higher benefit, a 4,000 monthly benefit. And if you match into a GPR or an AEGD program, it's typically around 3,500 of monthly benefit that you're able to claim. So once you have an individual policy, that policy is locked in. That is a non-cancelable and true own occupation contract.
And the second question, I'm still not seeing Jeff, but that's okay, was about the student loans and the different repayment options and how the new Congress, which is Democratic controlled, is going to affect that going forward.
Can you say the first part of that one more time?
The student loans and the different repayment options versus, like, I know through October, there's still no interest rates, but the other effects going forward.
Absolutely. So what the now president and vice president said on the campaign trail was that they wanted to do one of two options. They were trying to do both options, but again, they have to get this passed through the proper means. Forgiving everyone that has student loans up to $50,000 immediately, and making the interest rate a flat interest rate of 3-4% instead of some interest rates that we see with our clients that are 9, 10, 12+%. I actually think that student loans are going to be in a better place than where we currently are. I have clients on a monthly basis still allocating $12,000 per month to pay back their student loans.
Do you want to tell us a little bit about what you do with Certified Financial Services?
Right. So again, we do overall planning for dentists in general. I work with dentists. My father's an orthodontist. He just retired December 30th of this past year. And we help you and guide you through disability insurance, investment platforms, life insurance. I help you with practice transitions, buying into practices and so on. We have attorneys that we work with, and I'm based in the city. My business partner, Jeff, is based in New Jersey. And usually we get to meet you guys face to face, but we haven't gotten the vaccination yet. And that's what we do.
So if anyone has other questions, feel free to unmute yourself or DM me or DM us. And we'll just wait a little longer for Jeff.
I have a question. So with the repay, so it's 10% each year, and that's for 25 or 20?
So undergrad is 20, grad plus, like graduate school plus is 25 years. Whatever is owed at the end of the 25 years, they are saying currently that there will be some type of taxation on that amount of money that is being forgiven, but nobody has any idea of what that percentage would be, so to say.
Okay. And now, sorry. And with the 10%, so is that I'm confused about the interest part. So the interest is cut in half?
Right. So the way that the revised program works is that it goes off 10% of your income from the last filing date. So again, if it's zero, it's zero. But the interest is actually credited back on your next statement. And you can find all this information on the student gov website and type in income-based repayment, and 4 options will appear. Pay as you earn, IBR, income-based repayment, revised payment, and there's another one that I can never, contingency or something like that. But that's month to month.
Okay, thank you.
Absolutely.
Hi, I actually have a question in regards to disability insurance. How does pre-existing conditions, let's say like an injury from when you were a child type of thing, how does that affect your disability insurance?
So, so as being dentists, right, your joints, limbs, and muscles are very important to you. So I'll give you an example. Loops saved my dad's career by extending it by about an extra 14 years because it saved his back and his neck. So with that being said, the insurance company, for an individual contract that you own, that you get to put in your pocket, there is an underwriting process, meaning that the insurance company is going to look through 2 main sources. They're going to get your medical records from your physicians, and there's also a system called the MIB, Medical Information Bureau. These insurance companies have the right, because you sign off on the application, they have the right to pull your information. That system pulls your prescription card and your health insurance card. So if you went to XYZ physician and you use your insurance, it's going to come up when they do it, but it doesn't show them what what diagnosis there was. There's no notes there, just who you went to see and what date you went to go see them. So for pre-existing things, so for example, every year, working with students that are graduating, the number one claim issue we have, or issue, not claim, number one issue that we have is mental and nervous medications. So anything of that nature, the insurance companies have a problem with, not just for dentists, for everybody in general. So taking away the mental and nervous conversation of that, if you had your right shoulder scoped, or if you broke your leg skiing or something of that nature, it's very possible that the insurance companies will want to rider out that body part, or that whatever it might be. So if you have a bad back, they have the ability to exclude your back, right? Not all exclusions are permanent. Does that make sense?
Yes, thank you. So is there like a time frame on that, or is it like your bad back in the future for a long time?
So it really depends on what type of injury it was and when it occurred. So going forward, if you were in undergrad, your freshman year playing Zog soccer, and you twisted your ankle and you went to the physician to have it looked at to make sure that there was nothing seriously wrong, the insurance company is going to want to know what happened to that. So again, I'm hesitant on saying anything specifically, because it really depends on when the injury happened and what the outcome is. Does that make sense? So if
Gotcha.
you're having an
Thank
issue with
you.
it,
Yeah, that does make sense. Thank you.
excellent. So Jeff is here.
I apologize for my attire. I was overly excited. My son is a freshman in high school, and he's made varsity basketball, and we're actually allowed to go to the game. And they went into overtime and gutted out. They almost went to double overtime. I would have left. My wife has said, you have to leave. So I do apologize. I am here. So I assume, Matt, you went over the parameters and we're just answering questions at this time?
Yeah.
Okay. Are
If
there
you
any
want
others?
Do the presentation now, or if not, I have messages that were sent to me, so it's up to you guys.
Let's do through messages. So if anybody, at the end of this, you guys are going to have the ability to send me an email. We can either do a phone call or a Zoom call. Again, I'm not meeting clients in person yet. I apologize, but I don't have the shot. So you'll have the ability to contact us. So whoever it was that asked the question, I can't tell because my screen's all goofy, but whoever did ask a question, if you want to have a conversation privately, our conversations stay between us. They don't go anywhere.
So I was sent a message about genetic conditions with disability insurance. And for example, if you were born with scoliosis, as someone said that they are, would this be covered with your disability insurance?
So the answer to that is always, have you had treatment for something, right? And how long ago did it occur? And yes, if someone's born with scoliosis and then maybe at a young age has to wear a brace, or if it's really severe, did they have to have surgery? Was their spine altered? That can affect a policy later in life when you're ready to apply for something. But for example, I had scoliosis. It's more of a mild case. And I never really had specific treatment for that per se. So it didn't affect my ability to obtain disability insurance when I went for my own. But for any condition, it really comes down to the underwriter's decision. Now, Matt and I have enough experience combined between us, I think almost 50 years or more of combined experience, that we can guide you and help you and answer some questions, obviously on a personal level, when you go through the underwriting process. But something like that, it really depends if it's caused issues for you during your lifetime. Have you had to go for physical therapy consistently? Are you in chronic pain? Have you complained to your physician about it? Did you have to go to a spinal surgeon? So all of that will affect it one way or another.
So what would you tell, since a lot of us on here are between second and third year students mostly, what should we be doing going forward in regards to both disability insurance and student loans? When should we start worrying about it? When should we start looking into policies? Things like that.
Matt, you take the student loan part.
Fair enough. So with student loans, I know it's terrible, but you have to open the emails. You have to see what's going on. So back in 2008, the Justice Department went after Sallie Mae because Sallie Mae was doing terrible things to people that had student loans with them. They were caught because somebody actually opened up their statement and actually looked at it and saw that the interest rate was 29.9% on 70,000, which is a lot. So that's the first thing. The second thing about student loans is depending on what you're going to do. So if you're going to go into a GPR AEGD, it's a little bit different tactic than if you go into a longer term residency, right? So if that makes any sense.
How does it, I have a question. How does it affect if I decide to go to longer term residency, like specialty, like 3-year specialty?
Sure. So a 3-year specialty. So your first year, essentially, you would be paying 0 of 0 because the previous year you would have just graduated dental school. So if is a 3-year program paid or not paid?
Not paid.
So you would essentially go on that as soon as you graduated dental school. There's usually a 6-month forbearance process to switch over the servicer and to get your dental school to register it with the actual federal government that you now have graduated dental school. And then that takes about 6 months. So you have the ability to then register into the program that you choose to, and that would eat 3 years out of your 25 years. But I just want to say something about the 25 years. Majority of our clients won't have student loans for 25 years because every time you get a pay increase, the 10% costs you more money every month or every year. So eventually when you start making 200, 300, 400 plus $1,000, you're going to make significant dents into your student loans. Because again, you're paying half the interest versus paying the full interest.
And when it comes to a policy about when is the right time, we're asked that all the time, Matt and I, about when should we implement a policy. Just remember, there's a couple things that go into it. One obviously is budget, right? What can we afford and when can we afford it? The other thing is so that people need to understand though, is that when you go to obtain disability insurance, just like your question before, Michelle, about scoliosis, there are medical questions that you need to answer. So as you continually move on in life, it's possible that your health can change. And so obtaining insurance really depends on an underwriter approving you. And so my recommendation always is, if you can obtain it, if you're healthy, and because I'm assuming everybody here on the phone is relatively young, it usually fits within a budget that you can do it. And the younger you are, the healthier you are. Because also remember, with the way insurance works is that it's non-cancelable. Now that sounds scary, but that means that you can cancel at any time you want. Once you're approved, the insurance company can't cancel it on you. So the power is in your hands once you have a policy. So what makes me upset is when Matt and I either give a seminar or refer to people in residency or fellowship, or they're done and they want insurance, but they've waited all these years and now something's changed medically. And unfortunately, we can't, procure a policy for them. So that is something to consider. I mean, we definitely understand that budget's going to be different when you're in, as a student versus when you're being paid. And we understand that. But, we're here also to help. We're here to try to craft a policy to fit any kind of budget that you have, because my feeling is something is better than nothing. That's how I've always viewed it.
If the budget is there, do you recommend having a larger policy or kind of going for a middle of the road type thing?
Well, when you say larger show, the parameters of a policy is the amount they're going to give you, right? So that's what's called your base benefit. That benefit really, it can't go more than a certain amount. You could lower it, but even if you said, hey, I can afford it, I want $10,000 a month of coverage. If I got sick or injured, I want to be paid $120,000. You actually couldn't obtain that right now because your income wouldn't justify it. So when you say larger, what we may be referring to is how many extra riders do we want? Do we want the cost of living? Do we want something called the enhanced partial? There's no future increase option, right, Matt? It's just the benefit rider. So that's not a consideration. So it's really just discussing how long do we want to be paid? It's really going through the parameters. But what's nice is that there is a choice, Michelle, of something called a level premium or a graded premium. So a level premium means you lock it in today, it will never go up. Graded means it starts off lower than the level, but will go up a little bit each year. And that's the premium structure probably you're going to want to utilize while you're in training, or while you're a student, because we want to keep the premium as low as possible. And if you use that graded premium, it probably would fit any budget. And then what you do is once you're finished with your studies and you graduate, and depending if you go into residency or not, then you can switch it from a graded to a level any year you want. Excuse me. The only difference is you're going to switch it at the age you are at that time. So if someone is 26 today, and then when they switch it, they're 30, the level will be a little bit higher because you're 4 years older.
There was one other thing about disability insurance. So if any of you are going to Florida, Arizona, Utah, Nevada, or California, the insurance companies call these prime states. They actually charge you more money for the 15 to 20% more, and they actually limit what you can have in your policies, because in those 5 states are the 5 largest claim states in the US. So they actually add an additional premium on top of the actual premium. If you take out your policy, let's say in New York, New Jersey, Connecticut, Pennsylvania, those are good states. You get to use those states to write your policy, even if you decide to move.
Does anyone else have any questions that we can directly answer?
I'll ask a question. So with the disability insurance, can I do like a universal life insurance where I can increase the amount I will be paid even if I want to pay more premium? So can I, like, in 10 years be like, yeah, I don't want to do 5,000 a month if I lose my job. Let's do 10,000 a month, for example, or something.
So the way ABIT works is that you can have what's called a base benefit. So you'll get a certain amount today. And then they actually just changed the rules, most of the companies, to what's called a benefit purchase rider. So what that means is every 3 years, you have the right to increase your coverage. Or if your income jumps a certain amount, then you can utilize it that year. So for example, if you are in school or you just went into residency or you're finishing and it's not within that, it's earlier than that 3-year time frame from the time that you implemented it, then you can use it. It's like a special event. So the answer is if you can at that point. It's different than a universal life where you can dump in extra money, what you're referring to. It works differently, but the answer is yes, there'll be a
5 states: Florida, Arizona, Nevada, Utah.
Okay, thank you very much. One last question. Do I have to add that rider in the beginning?
Yes.
So like once I start, okay, once I start, all right.
Whatever you start with is usually what you're going to have in your policies, unless you decide to change your policies at some time, which is difficult as you get older because your health changes. Just remember, disability insurance is there to protect your ability to earn an income, right? So if this year pregnancy complications was a big one because of COVID, the OBGYN said, we're not going to send you back to work. What, everything's wonderful, and they're excited to go back to work. Sarcastically.
So I have a question. Since the pregnancy and disability, if dentists get pregnant, what is the usual like coverage for those time?
So that's a good question. What you have to realize with any of the policies is that it's not maternity leave coverage. So if one were to get pregnant, have a healthy pregnancy, have a healthy childbirth, what quote unquote normal childbirth, and then decided, hey, I'd like to be home with the baby for 6 months, that is not a reason to make a claim. However, the top companies, the contract that you would want, they state that if there are complications of pregnancy, that is absolutely a reason to make a claim. Whatever reason, I had a client that had nerve damage when she had a normal delivery, but down her leg, and she was a dentist, and she could not stand or even sit for any lengthy period of time to see patients. So she literally made a claim, and she was out for 6 months, and she received the benefit. So it is important, what I always stress to clients for the past 28 years is that contract language matters. The premium, what you shouldn't be doing is you should not be implementing a policy based on the premium. You should be implementing it based on the contract language. Because in my time of being in this industry, I've seen many of my clients make claims and nobody ever asks, what was I paying? All they ever ask me is, how much am I going to receive now? And how long am I getting paid for? And does it go up? Your concern is very different. It's easy when nothing's wrong to really laser focus on what you'll be paying. But the reality is on that back end, you're going to want to know that you're going to be paid and it's the strongest contract that you can possess. And I'm not saying that one policy will be $1,000 a month and the others are $10. There's not that huge of a gap. They're all around the same, but one might be slightly higher than the others. And in life, normally you get what you pay for. And disability insurance holds true as well. There's always a reason that something may be more expensive. As
Thank
Hannah,
you.
because my daughter changed it and I technologically stunted. I don't know how to change it to my own name. So I'm going to have to get my 12-year-old to change it back.
Okay. I can change it for you, but I'm having so many computer issues right now. I'm in like slow motion.
That's okay. That's fine.
Does anyone have any final questions? Those are great questions, Diana and Abe, and also Diana Kim, about the pre-existing conditions. Or Matt and Jeff, do you have any final comments that you want to say?
I mean, I would just say, again, and I don't know how Matt started me. And again, I apologize for being a couple minutes behind, is that I'm sure Matt touched on, your ability to earn an income is truly your most important asset. I can't stress that enough. Matt and I do very comprehensive planning for clients, very successful people, dental professionals making, very good income, owners of multiple practices. And I will stress to them, as I've stressed to you, the most important asset is your ability to get up every day and go to work, open up your practice, or, if you're working for someone else in the beginning, to be able to see patients and provide the services that you've been trained to do. It's almost like you've won the lottery ticket. You've earned it. You guys are all working super hard to get where you are. And just do this exercise. Excuse me. If you think about what your income will be 1, 2, 3, 4, 5 years when you're done, and multiply that by 30, that is your earning capacity. It's multiple of millions of dollars. So the disability insurance coverage that you're implementing isn't to protect you for your monthly expenses or 1 year's income. It's to protect you if you lose the use of a hand or a thumb on your dominant hand. I mean, we see so many clients that are in your profession with carpal tunnels, wrist problems, elbow, neck, back, because you're hunched over a lot like this, and we see it all the time. And so I can't stress enough that, you need to take it seriously. And in any financial plan, when we work with clients, that really is the first thing we do with everybody. We review what coverage they possess. And if they don't have anything, it is the first recommendation to really, discuss why not, and, should we put something in force? So really, take it seriously, whatever stage you're at in your life, even now, and, think about if something can fit within your budget to protect you, because that's what it's all about. If something happens, unfortunately, it's not about Matt and I, it's about you. It's about your plan and your capacity to work and your income. So, and we care. I mean, that's why we're always asked to do these things, because I don't want to see any of you, ever in a position where student loans have to be paid and there's no income, and because somebody's injured or sick. So, think about it. Good.
Yeah. Michelle, thank you for putting this on and putting everything together. Thank you.
Thank you both for always being so supportive of Asset District 2 and all of our programming and other endeavors. We really appreciate
Absolutely.
it.
Thank you.